Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness. And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified, and that's actually bullish for tech.
Which artificial intelligence, AI, stock is most likely to be the greatest winner in 2024 is obvious. Even though Nvidia is expected to have a gain of over 180%, it won't be the case. Rather, with its stock rising more than 330% this year, Palantir Technologies is set to become the leader in AI. But is Palantir the superior option in the future? I don't believe so. Here are some reasons why Nvidia is the far superior stock to purchase in 2025 over Palantir. Palantir has an excellent growth story. CEO Alexander Karp boasted in the company's third quarter report, "We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down." Palantir's income increased by 30% annually as a result of the AI demand Karp mentioned. The adjusted earnings per share increased by 43%. In November, Karp wrote to stockholders, "This is just the beginning. Palantir's expansion is accelerating," he said. With the U.S. government as its largest client, investors are thrilled about the prospects for the corporation following Donald Trump's election to a second term in the White House. How about Nvidia? With a 94% year-over-year revenue gain, the GPU manufacturer outperformed Palantir by more than 3 times. Year over year, Nvidia's adjusted earnings per share soared by 103%. Crucially, sales of GPUs built on Nvidia's new Blackwell architecture were not included in those figures. Blackwell has the potential to be his company's most successful product to date, according to CEO Jensen Huang. He even believes it has the potential to be the most successful product in the history of the computing industry. Additionally, Nvidia releases new devices every year following Blackwell. In terms of growth, I would contend that Palantir and Nvidia are in separate leagues. Is it feasible for a stock with less promising growth prospects to nonetheless be a better choice than another? Yes, provided that the first stock's growth potential make it more attractively valued than the second stock. However, in the situation of Palantir vs. Nvidia, this is not the case. The share price of Palantir is 161 times its projected earnings. Financial markets infrastructure and data provider LSEG reports that the stock's price-to-earnings to growth (PEG) ratio, which is based on 5-year earnings growth predictions, is 3.34. By comparison, Nvidia is extremely inexpensive based on those valuation criteria. The forward earnings multiple for Nvidia is 33.4. 0.89 is its PEG ratio. When it comes to value, Nvidia is the obvious victor between these two equities. I'm not alone in thinking that Nvidia is a much better stock to purchase than Palantir. Nvidia is also more popular on Wall Street. Just 4 of the 19 analysts that follow Palantir that LSEG polled in December gave the company a buy or strong buy rating. Holding Palantir was advised by 8 analysts. The stock was classified as a sell or underperform by 7 analysts. Compare that depressing image to Nvidia's. A staggering 59 of the 63 analysts who follow the chipmaker and were polled by LSEG in December assessed the company as a buy or a strong buy. The other experts suggested that Nvidia be held. No one believed it was a good idea to sell the stock. Palantir is beaten by Nvidia on 12-month price estimates as well. There is a 24% upside potential reflected in the consensus price objective for Nvidia. Palantir's current share price is almost 47% higher than the average analyst's price estimate. It's not hard to figure out why Wall Street has such a better impression of Nvidia than Palantir. One stock will always be the superior choice when it has higher growth potential and a more appealing valuation than another stock. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
A new book coming out chronicling the history of the chip designing juggernaut Nvidia and the company's culture, overseen, of course, by co-founder and CEO Jensen Huang. Joining us now, the author of that book, Tae Kim. He's senior technology writer at Barron's. And, you know, obviously everyone now is obsessed with Nvidia, Tae. But you started looking into this and started working on the book just before the sort of most recent explosion in the shares and in interest. So talk to us about how that sort of came about.
Well, I just got lucky. I got a cold email in my inbox of May of last year as an editor from Norton, and he said, oh, I know Matt Ball, he was the author of ours, and he recommended you to write the book. And the first thought I had was, there has to be a book on Nvidia. I went to Amazon, looked it up, and there was none. I was stunned. Like every other big tech company has 4 or 5 books, and for some reason, no one has written a book on Nvidia. And even at that time, it was still the biggest chip company in the world. It had some success. And then, boom, a few weeks later, they had one analyst called the biggest upside quarter he's ever seen in history. And then we've had these 5 or 6 quarters where they're growing triple digits at a revenue number that has been unprecedented in the history of the computing industry. So it's been quite a ride. I've been lucky to talk to all the early senior management, employees, competitors, and everyone is thrilled to tell this story because it's one of the best stories in American business history. There's no doubt in my mind about that.
And Tae, let me ask you, because you look at NVIDIA and the success they had, and Jensen he's got a lot of really smart engineers, got a lot of money, but there's a lot of tech companies who have a lot of smart engineers and a lot of money. What do you think explains NVIDIA's great success? I mean, as you say, you know, one of the great stories, right, in American entrepreneurial history. What is it? Is it Jensen? Is it his leadership? Is it the culture?
It's all of the above. Yeah. You just nailed it. We have this extraordinary outcome where NVIDIA is literally the best performing stock in US history with any company with 20-year returns. If you put in $10,000 at its IPO in 1999, it will be worth $40 million today. So what explains that? And you nailed the key hallmarks of it. And it's the culture that Jensen was able to create. It's the work ethic. I had this story in the early 90s where this one employee, she worked after midnight and said, oh gosh, and she slept for 3-4 hours and then woke up at 4 a.m. and she was thinking, oh, I want to go back to bed, but no, I have to go kill Intel because Jensen just gave an inspirational rally cry that we must kill Intel because they're out to get us. And this is when Intel was trying to snuff them out. The second component is the talent thing that you said. Jensen is obsessed with finding the best talent. He will interview someone, ask them, who are the best people you work for? And people will just tell him. He will pocket that memory, and 2 years later, go after that person and recruit. And he's relentless. He recruits the best people, and they usually say no the first time, but eventually he gets them. And he's also great at retaining people. NVIDIA, if you look at their annual filing, their turnover is only 3%.
There is a new danger to Nvidia, and it isn't a competing chip maker. China declared on Monday that it will begin an antitrust investigation against Nvidia's $7 billion purchase of Mellanox, a networking technology company. China's competition watchdog, the State Administration for Market Regulation, said it is investigating whether Nvidia is following the conditions of its conditional approval of the 2020 transaction, which required the chip giant to treat Chinese enterprises equally with other companies. Nvidia connects its potent graphics chips in big servers using Mellanox's networking gear, enabling them to act as a single, enormous AI processing engine. Although the U.S. government has compelled Nvidia to cease selling its most potent products to clients in China, it is unclear how the company is breaking the conditions of the agreement. The investigation comes after the U.S. took a number of steps to limit China's access to AI chips that were created and manufactured in the U.S. out of concern that the Chinese military would acquire them. Cutting off China's access to Nvidia's most potent and sophisticated chips, such as its much-coveted Hopper family of AI accelerators, is one aspect of that. It's hard to predict how far China will take the inquiry and whether Nvidia may suffer any legal repercussions there. However, as the current chip champion in the United States, the business has rapidly emerged as the newest and most valuable chess piece in the nation's competitive economic brinksmanship, which could result in the emergence of two entirely distinct chip sectors. Bill Baer, a visiting scholar of governance studies at the Brookings Institution's Center for Technology Innovation, said it could be extremely concerning that China could be using its antitrust authority to promote non-antitrust outcomes. He continued, it's difficult to determine whether this investigation is based on the merits of the competition or if it's a part of the larger back and forth we've been seeing and will likely see more of in the incoming Trump administration. In an attempt to keep its A100 and H100 processors out of the hands of China's military, the U.S. first prohibited the sale of Nvidia's chips to China in 2022, warning the firm it could no longer export them. Nvidia responded by creating the A800 and H800, two less potent CPUs for the Chinese market. However, the United States also prohibited the sale of certain processors. China is now retaliating. Although there may be some legitimate antitrust issues in the nation, analysts say this is unlikely. According to Boston College Law School assistant professor David Olson, China occasionally employs neutral antitrust laws. However, the state may use the law as a tool when its strategic interests are involved. There are many grounds to believe that's the reason it's being enforced against Nvidia. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Because given the jump in that stock, there's a lot of people in Nvidia who've made a lot of money. I mean, you would think there'd be some significant folks who are like, you know, I can spend the rest of my life spending at this point.
They retain a certain type of people, I'll call them mini Jensens, who love, I mean, Jensen is wealthy beyond his wildest dreams, right? But he still works every day of the week, crazy hours. He's working Sunday evening with his Highland Park Scotch, drinking, reading hundreds of emails. These are people that, you know, I mean, wealth is great, but they're driven by a passion to work, and it gives them satisfaction. Like, he loves working. He says working is relaxing. When he goes to a movie, he doesn't remember the movie because he's thinking about work the whole time. So all these people, like all the senior management teams, a lot of them have been there for 25 years. Like, these are people that are driven by the mission, they're driven by the passion, especially now. In early days, it was mainly video game PC chips. Now it's the AI stuff they're doing is changing the world in every single sector. I mean, one real big sector that Jensen is most excited about is like the potential for AI and digital biology. So this is stuff that could possibly cure cancer. This is stuff that really changes the world. So that's how you retain people, if you have a mission and passion to do that.
Tay, I do want to ask you, I mean, it's not as though the road has been easy, right? There have been obstacles. The latest obstacle could be China, right? And the company has sort of negotiated and offered lower advanced chips in China to try to avoid some of the regulations. But the latest reports that they could be facing an antitrust investigation in China. Given what you know about the company, what you've learned, like, how do they attack issues like that?
I think NVIDIA will just have to listen to what the US government tells them to do. I mean, the US government has put in restrictions on their most advanced GPUs, so their revenue has already gone down. Most analysts are kind of zero-outing the China revenue.
Business.
Yeah, because their best, fastest chips, they can't sell in China anymore.
Right.
So I think part of this is just China thinking of this as theater to kind of strike back at the US, but China wants NVIDIA's chips. They want NVIDIA's most advanced chips. So it's kind of like, what are you going to do? Their chips are already banned. The high revenue stuff, the best stuff, is already banned and restricted for export is the technical term.
Right.
So I wouldn't work, I mean, it's already happened.
Nvidia nevertheless makes a substantial amount of money from sales of less sophisticated chips that it is permitted to sell in China, despite being prohibited from selling its most potent and profitable products there. China accounted for $5.4 billion of Nvidia's $35.1 billion in Q3 sales, up from $4 billion in the same period previous year. However, China still accounts for a lower portion of Nvidia's total revenue because the chipmaker is unable to sell its priciest hardware there. China sales made up 15.4% of the company's total revenue in the third quarter, compared to 22.2% in the same period the previous year. Additionally, China accounted for 12.2% of Nvidia's overall sales in Q2, compared to 20.2% the previous year. This is a tendency that will undoubtedly continue. However, S&P Global Ratings Technology Director Andrew Chang believes Nvidia can weather the drops. Chang told Yahoo Finance that this is a negative, but a slight one for Nvidia. This is not to imply that Nvidia is not interested in competing in China, but losing China is not as terrible as it might seem. Due to the United States' prohibition on sending Nvidia chips to China, Chinese businesses are compelled to create their own rival CPUs. Combine that with earlier prohibitions on selling Huawei U.S. semiconductor technologies. The beginning of two rival semiconductor ecosystems, one centered on China and its own allies, and the other on the United States and its friends. 4 Chinese industry associations that deal with semiconductors, telecommunications, automobiles, and the digital economy last week cautioned Chinese businesses against using U.S. chips, stating that they were no longer safe for domestic use in China without offering any justification. However, by adding needless complexity to an already enormous supply chain, dividing the chip industry into 2 rival kingdoms will unavoidably harm big businesses like Apple that sell their goods in both the U.S. and China. According to Associate Professor Lori Yu of Columbia Business School, it will provide significant operational issues for international firms. The business community is not doing well in that scenario. Although a split chip industry is still a long way off, it is undoubtedly becoming more and more likely in the U.S. and China. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.